and growth of the company. Then you have executive directors, all right, who are also knowledgeable in the relevant areas of the business, all right, and they are involved in day-to-day operations, and they are in charge of certain areas. For example, you can have ED IT, you can have ED operations, you can have ED perhaps marketing, and so on and so forth. Then you have non-executive directors that come from outside the organizations, men and women of integrity and credibility that has proven themselves in relevant areas of industry, who are drafted to come and be serve in the interest of the public. Okay, then you also have independent director. An independent director is a non-executive director who is not a substantial shareholder of the company, all right, that is the one whose shareholdings directly or indirectly does not exceed 0.1% of the company's paid up capital. His interest in the company does not exceed 0.1% of the company's paid up capital. Is not a representative of a shareholder that has the ability to control or significantly influence management, all right, has not been employed by the company or the group of which it currently forms, all right, or has served in an executive capacity in the company or group for the preceding 3 financial years. So the person must not be an employee or a past employee. Okay, is not a member of the immediate family of an individual who is or has been in any of the past 3 financial years employed by the company. Is not a professional advisor to the company or the group, all right. Is not a significant supplier or a customer of the company. So you can see that is the difference between non-executive directors and independent directors. So what we're saying, an independent director is somebody that more or less has no dealing with the company at all, all right. It has no significant contractual relationship with the company. It's not a partner or an executive of the company's statutory audit firm, all right. Is an independent director. An independent director should be free of any relationship with the company or its management that may impair or appear to impair the director's ability to make independent judgment. Okay, so all these are the officers that you are going to have in the board of directors, the CEO, the ED, the independent directors, the non-executive director. Then what about the issue of a multiple directorship? Of course, you cannot say that a director should be a director of just a single company. That is not possible. A director could be a director in so many other companies, but you need to consider whether that director will have time before you are employing, before you take him up as a non-executive director. You need to ask questions. How many companies are you sitting on their board? Will you be able to have time for us? So it's very, very important that you look at the obligations and commitment of nominees before you appoint them to be a member of the board of directors. All right. So a prospective nominee to the board of a company should disclose membership on other boards. All right. So based on this, the board should make decision on whether the person will have time to be able to commit to the organization. Okay, so these are the provisions of the code on corporate governance for public companies in Nigeria. Financial Reporting Council of Nigeria has set up a committee to harmonize the various codes that currently exist. So this is very, very important so that we can have, just like in UK where they have a single code for corporate governance, we could also have that. So we are working on this and we'll definitely get there. All right, so the audit committee is very, very important. The audit committee is a subcommittee of the board of directors. Is a requirement of CAMA. Remember, we've talked about the regulatory environment. CAMA 1990 section 359 requires every public company to establish an audit committee. Okay, so it reports to the main board. At least one board member of the committee should be financially literate, because they are going to be dealing with the financial statement, the external auditors. So they must have knowledge of accounting or financial management. All members should have basic financial literacy and be able to read and understand financial statements. Okay, a key purpose of an audit committee is to establish a buffer, all right, between the auditors and the EDs, all right, especially the internal auditors. Okay, so that sometimes internal auditors may be investigating the executive directors, or they may be investigating the managing director. So if I am investigating an ED and I have to report to the MD, it could create issues. So sometimes the internal auditors may have dotted line contacts with the audit committee, which will also have non-executive directors as members. So if there are issues that has to do with the MD, that has to do with the EDs, that the auditors may not have the boldness to go to the ED or to go to the MD, they can go through the audit committee. So you can see the audit committee is there to actually shield the internal auditors and to provide more objectivity and independence to the internal auditor. And of course, the external auditors to also relate with the audit committee. The audit committee should therefore help to ensure the independence of the external auditors. The companies and other matters are stipulated that the audit committee shall consist of an equal number of directors and representative of the shareholders of the company, subject to a maximum of 6 members, and shall examine the auditor's report and make recommendation thereon to the AGM as it may think fit. The audit committee member representing to the members shall not be entitled to remuneration, alright, and shall be subject to re-election annually. Any member may nominate a shareholder as a member of the audit committee by giving notice in writing of such nomination to the secretary of the company at least 21 days before the AGM. Duties and responsibility, alright, of the audit committee. This is very important, is an examiner's interest. Okay, to assist in the oversight of the integrity of the company's financial statements, compliance with legal and other regulatory requirements, assessment of qualification and independence of external auditors, and performance of the company's internal audit function, as well as that of external auditors. So the audit committee most of the time they are the closest to the external auditors, and they are very close also to the internal auditors. So they can ensure the effectiveness of the work done by the two of them, and they also help in ensuring that the company's financial statement has integrity. Okay, establish an internal audit function and ensure there are other means of obtaining sufficient assurance of regular review or appraisal of the system of internal controls in the company. So they are also responsible for establishment and oversight of the internal auditor function. This is also part of the duty of the audit committee. Ensure the development of comprehensive internal control framework for the company. Obtain assurance and report annually in the financial report on the operating effectiveness of the company's internal control framework. Of course, this is a requirement of Sarbanes-Oxley Act 2002 United States, that management had to report on the adequacy of internal control. Okay, so the audit committee could perform this function. Oversee management process for the identification of significant fraud risk across the company and ensure that adequate prevention, detection, and reporting mechanisms are in place. Of course, we are familiar with the fraud triangle, that is opportunities, rationalization, and pressure. So the audit committee should be aware of this triangle. Pressure, if there are pressures within the organization to perhaps the investors are saying you have to give us 30% ROI, return on investment. There's pressure on management, you're already aware of that. And so based on that, you'll be conscious that the financial statements could be manipulated, or you have some key staff that are under financial pressure. Most likely they will commit fraud. If the opportunities to commit fraud are there, then people will take advantage. Lack of internal controls, weak internal controls, all these will create opportunity for fraud. If there's rationalization in the system, whereby people can say, well, it is the money they didn't pay me as part of my salary that I'm collecting, or the company, the money that the grandfather of the MD is owing me. owing the grandfather of my own grandfather. That is what I, the grandson, want to collect. When you start having all these kind of feelings in the organization, it means that fraud can occur. So the audit committee will be sensitive to any of these signals, opportunity, pressure, or rationalization in the company, and they start, developing a fraud response mechanism to prevent or detect all this. Okay, at least on an annual basis, obtain and review a report by the internal auditor describing the strength and quality of internal controls, including any issues or recommendations for improvement raised by the most recent internal control review of the company. Then discuss the annual audited financial statements and half-yearly unaudited statements with management and external auditors. Discuss policies and strategies with respect to risk assessment and management. Meet separately and periodically with management, internal auditors and external auditors. Review and ensure that adequate whistleblowing procedures are in place. Whistleblowing means if there is fraud in the organization, somebody must be able to shout anonymously to the audit committee or to internal audit that this is in place. That's why I see most of these public limited companies, if you go to their website, just check their website, you're going to see a place for whistleblowing, maybe for staff or for customers. Anything you are seeing in an organization, if somebody is asking for a bribe or somebody is doing something that is illegal, you can shout anonymously. Okay, so it is the job of the audit committee to ensure that that is in place. Alright, review with the external auditor any audit scope, limitation or problem encountered and management responses to same. So instead of the auditors qualifying your financial statement because of limitation, sit down with them and review those scope and see how management will respond. Okay, review the independence of the external auditors and ensure that where not all the services are provided by the external auditors, there is no conflict of interest. Okay, preserve auditor independence by setting clear hiring policies for employees or former employees of independent auditors. So sometimes auditors may want to audit team member want to cross from their audit firm to the client firm. This could create issues. So this is the audit committee responsibility to ensure that this does not harm the organization or the auditing firm. Consider any related party transaction that may arise. Invoke his authority to investigate any matter within his time of reference, for which purpose the company must make available the resources to the internal auditors with which to carry out this function. Then report regularly to the board. Then Ican states that, subject to other additional functions and powers that the company's article of association may stipulate, the objective and function of the audit committee shall be to, according to Ican, ascertain whether the accounting and reporting policies of the company are in accordance with legal requirements and agreed ethical practices, review the scope and planning of audit requirements, review the findings on management matters in conjunction with the external auditors and the departmental responses thereof, keep under review the effectiveness of the company's system of accounting and internal control, make recommendation to the board in regard to the appointment, removal, and remuneration of the external auditors of the company, authorize the internal auditor to carry out investigations into any activities of the company which may be of interest or concern to the committee. So these are the responsibility of the audit committee according to Company and Allied Matters Act.